severe.
Yes. Yeah, the market sees this kind of commentary and says, well, maybe this is a government that's more likely to get what it wants than others. And so where does that leave investment strategy around Chinese stocks? Because, one of the other lines they gave us this morning is they're going to finish rectification of big platform companies soon, which translates, it seems, as we're going to stop tackling big tech or taking down big tech in the way that they have been doing.
Yeah, and that is a big policy shift in terms of the rhetoric we've had recently on crackdowns, on common prosperity, on spreading wealth. I think if you take a step back and look at the long term, they need those tech companies in a sense because they're huge drivers of productivity and economic growth in society. And if you look at them, China's population is one of the most digitally wired in terms of smartphone usage. There is a lot of opportunity there. The short-term policy stuff is always going to swing around, based on what's happening in the world. But the long-term story with China, if you're an investor for 10 years, is still there.
Where are you on the Chinese currency? Because clearly it will respond to domestic developments, but it also responds to international developments and an impulse to de-dollarize. Certainly we saw that in Russia, and now maybe we're seeing that in parts of the hydrocarbons market. We've heard about Saudi Arabia talking about buying oil using Chinese currency. There might be limits to the extent they want to weaken the dollar as they peg their currency to it. But that aside, this is a big shift. This is a big rethink, it seems, for many people around the dollar. How do you see that developing?
I think the dollar dominance is too strong to shift at this point in time. So the stuff we've seen about, potential agreement with Saudis to buy oil in yuan, I think that's fairly small in the grand scheme of things. The big unknown is, with this shift to companies potentially knowing that their dollar reserves can be cut off, how does that shift in the future central bank strategies on those reserves? And that's the big unknown that, I think this conflict will have far-reaching implications that we probably don't fully understand yet.
Yeah, and some of the more short-term implications, we're seeing a lot of countries talk about increasing defense spending. Certainly Germany, just yesterday, $48 billion of armaments in a big push on defense. Just briefly, is that a sector that now investors are
potentially, the ESG considerations around defense, and it's, well, if the missiles are supporting Ukraine, does that make it good from an ESG perspective? And I think the thing it really throws up is there is no right or wrong on ESG. It's all opinions and viewpoints about what you think is, the way forward for the world. And I think it helps make that, when you showcase how unclear some of those debates actually are, I think it's helpful.
Yeah, certainly a lot of thinking to be done. Shanti, thank you very much for your time this morning. Shanti Kellerman, M&G Wealth CIO. Coming up on the program, nickel trading will reopen today at 8 a.m. That's in around 34 minutes' time. After one of the most dramatic weeks in metals market history. Of course, we've seen trading taking place in Shanghai, but it will restart in London after it was suspended on the LME and some of those trades were cancelled. We'll have more on where the market might move next. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
You will put a woman on Mars. You will be the first chief crypto officer, because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to Bloomberg Markets Europe. Half an hour until the start of cash equities trading here in Europe. And you can see European equity market futures moving to the upside, in particular DAX futures up by 2.3%. We missed out on the late in the day rally in the United States yesterday. That was driven by weaker oil prices. We don't have necessarily such weak oil prices. They're up a couple of percent this morning, but still we're catching up with the US. But more than that, we're factoring in what we've heard from China overnight. We've seen a big sell-off in Chinese assets, risk assets over the last 2 days, and that's all changed given the supportive commentary we've had from Chinese authorities about the way they plan to support stock markets and to support overseas listings. All of that has added up to the Hang Seng Technology Index being up by more than 20% in just one day. Tencent and Alibaba, two specific stocks that have been really beaten up, of course, with concerns around technology clampdowns in China. Both of those up by more than 20% in just one day of trading. So big news over in China. In that context, with that as the backdrop, we're going to see a return to one particular commodity trading in London today. Nickel trading will reopen at 8 a.m. London time, so in around half an hour's time, after one of the most dramatic weeks in metal market history, which plunged the entire industry into chaos. The LME has outlined new curbs on trading to prevent wild swings in the future, including daily price limits across metals. Joining us now with analysis, Bloomberg's energy and commodities editor, Emma Ross-Thomas. Emma, really nice to have you with us. Let's start with the short term then, I suppose. What are we expecting this morning, given we've had Shanghai trading taking place through the past week, haven't we? And we've had time to get despondent and then excited about Chinese growth in the meantime.
Yeah, absolutely. So the pre-orders are starting to come in now at 7:30, and then we have the proper kickoff at 8 o'clock. We actually our reporter did a poll last night of what to expect, and I think of the 16, 13 saw it dropping by 5%, which is the limit. You mentioned the limits earlier, a 5% trading limit, which is pretty tight considering what we've seen. So people are expecting it to drop the 5%, hitting that limit. Now what that means is that that limit doesn't produce a suspension of trade. It just stops the trading at that 5%, so it can't move more than that. So now, as you say, overnight we had the Chinese measures, and that has obviously given a massive kick to the market. Shanghai was up overnight, but worth pointing out that Shanghai nickel is just sort of catching up with London, so I think we are still expecting a drop. I would point out that one person in the poll saw it going limit up, so we'll have to see. But as I say, those pre-orders are starting to come in.
Okay.
Come in now.
So at least a couple of views to make that market, but there does seem to be an expectation that we see it move lower then, according to that polling. Now the LME has been under such pressure, Emma, since all of this. Not just the suspension of trading, but the cancellation of trades. And that seemed to be what agitated a lot of people the most. What are we hearing from the LME about the way it's going to do things differently? We talked about these limit up and limit down changes, but what else? Anything else?
Yeah, I mean, I think what we're hearing more is how furious people are, right? Who were, I think we crunched the numbers on that, and the trades that were cancelled, I think, amounted to about $4 billion. unprecedented, right, to go into the market and cancel those trades and, you know, essentially favouring one view over the other. I mean, some of the comments we had from real long-term veterans about just how, you know, disbelief really that could happen. We've had people talking about walking away from the LME, and as you say, the LME's had a pretty difficult sort of couple of years. You know, closed down during the pandemic. Was the ring going to open again? We had, you know, that U-turn, and, you know, now we're hearing talk about not only people walking away. You know, the idea of lawsuits is knocking around as well. So I think, you know, the problems aren't necessarily going away for Matt Chamberlain.
Yeah, absolutely. So we'll keep following the LME story, and of course, in the very near term, we'll track the particular metals, the metals company that had taken such a large short position that produced this short squeeze, and we'll see how that one develops. Of course, they've been talking to banks, we know, in an aim to limit the margin calls that they're facing. So we'll see how it all pans out. Emma, thank you very much. Emma Ross Thomas joining us with the latest on the nickel markets and what we can expect. Let us get a Bloomberg Business Flash. Top corporate stories we're covering this morning. Here's Laura.
Thanks, Anna. Sarah Bloom-Raskin has withdrawn as President Biden's nominee to be the next Fed Vice Chair of Supervision after it became clear she didn't have the votes to be confirmed. Raskin's chances evaporated after Democratic Senator Joe Manchin announced he would not support her. In a letter to Biden, Raskin said she was criticized for her views on climate change and the associated costs. Amazon has won unconditional approval from the European Union for its plan to buy the Metro-Goldwyn-Mayer movie company for $8.4 billion. The deal comes as Amazon faces increasing pressure to acquire more programming in the competitive streaming market. Intel has pledged to invest almost $19 billion to build a cutting-edge semiconductor production site in Germany. The plan marks the beginning of Europe's ambitious attempt to lure global chip makers back to the region. The announcement comes as part of CEO Pat Gelsinger's bid to reverse losses by developing the latest technology. That's the Bloomberg Business Flash. Anna.
Thanks very much. Laura writes here in London. Now, Mike Novogratz says Bitcoin won't rally aggressively with the Federal Reserve hiking rates. The billionaire cryptocurrency investor told Bloomberg Crypto he forecasts a 2022 range of $30,000 to $50,000 for the digital currency. The Galaxy founder says he maintains his 5-year forecast of $500,000.
Let's say the dollar might never be the same, right? I mean, I think the biggest thing that's happened in the last 10 years in lots of ways, maybe longer, is when Europe, the US said, hey, reserves that you thought were yours, they're not really your reserves. So what does that mean? It means the dollar or treasuries as a risk-free asset isn't so risk-free. It's not risk-free if you're Russian, and maybe if you're Chinese, you're like, why not? And so I think we're entering in a world that's unknown, where people are going to struggle to figure out what is the reserve currency. The U.S. isn't going away, right? The dollar's not going away, but it's not going to be the sole place. And so I think you're going to see this hodgepodge of assets. Gold, certainly digital assets are going to be part of that bucket. The whole world's not going to flip to Bitcoin overnight. But you're going to see more and more people say, I want to have some of my money outside of the sovereign.
How do you deal with that debate, though? Because a lot of people are talking about the problem with cryptocurrency is that you can use it to circumvent these sanctions. On the other hand, people in the community are saying, that's the point, right? We don't want government censorship to be able to take away our property.
So let's talk big and small. There is zero chance the Russian government can use cryptocurrencies to circumvent. Right? We're regulated by 25 different agencies, Galaxy, and I'm sure, you know, FTX and Binance and the others have just as many. And so almost all crypto moves through exchanges. Those exchanges have KYC AML processes, just like TradeFi exchanges. And so, plus Bitcoin is a public blockchain. You know, way back we hired Mike Morrell, who had run the CIA, we, Galaxy, and a few other companies, to do a study on Bitcoin. And he did like a 10 weeks exhaustive study with the security agencies, with the three-letter agencies, with crypto companies. And he came up with a thesis that if you were going to design a trap to catch criminals, it would look a lot like the Bitcoin blockchain. And so it's just, Elizabeth Warren is just wrong when she thinks you can use Bitcoin for Russia to escape sanctions. And we're looking at it the wrong way. The Russian ruble has depreciated over 90% in the last 10 years. Just this year alone, I think high to low is like 65%. The Turkish lira did the same. Bitcoin is a lifeline to people in countries with really poor stewardship of their economy. And we should be thrilled that Russians can get some of their money in Bitcoin so they're not completely broke holding worthless rubles.
Well, that brings me to the question of what the use case is, because in the context we're talking about it, it's essentially as a replacement for fiat currencies. Is that how you view what the future of digital assets is?
Listen,
is it a store of value?
So digital assets is a big word, right? I think Bitcoin has this really beautiful lane of being digital gold or a store of value. Everyone has a human right to have the fruits of their labor stored somewhere. And if you don't trust your government's currency, traditionally we put it in diamonds or gold. This is the first really digital version of that. And so I think that's Bitcoin's use case. Now listen, there's also a lot of other digital assets. There's digital stable coins or digital dollars or euros. There's things, Ethereum, digital networks, NFTs, right? And so the revolution that's happening isn't just in one lane. But I think for Bitcoin, it really is a place you store value.
Really interesting. It is a human right to have value stored somewhere. So says Galaxy Digital's Mike Novogratz. Speaking to Bloomberg Crypto, that's a new show, Bloomberg Crypto, a new weekly show co-hosted by Matt Miller and Kaylee Lyons on Bloomberg TV every Tuesday. Let's get back to one of our top stories today, and that, of course, is the war in Ukraine. President Biden will travel to Brussels next week to meet with NATO allies and take part in a summit of EU leaders as Russia presses on with its invasion of Ukraine. It comes as NATO defense ministers are due to meet today to discuss the crisis. Let's go to Bloomberg's Maria Tadeo. Maria, you're outside NATO, I understand, and that is where we're seeing these defense ministers meeting. They're possibly thinking about a lot more spending than they were just a couple of weeks ago. So what is top of the agenda for NATO ministers?
Well, Anna, yesterday we heard from the Secretary General making it very clear if there's any indication of a threat to a member of NATO, there would be Article 5, and that is a sacred obligation for all members in this alliance. And it means that if one is attacked, then everyone would be attacked. And the real conversation now is what to do in Eastern Europe. We have heard repeatedly from members of government in the Baltics, but also Poland, this need to have more NATO deployments and more NATO troops in what they perceived as an increasingly aggressive Russia. Then, of course, Anna, a lot of this would preview what is now seen as a big meeting next week, where President Biden will be here in a week from now in this headquarters. A lot of this, of course, has to do with the future operations of NATO and what is seen now as I said, an aggressive Russia, perhaps moving eastwards, but also this idea, Anna, the operations are probably going to be bigger in terms of troops, deployments, army equipment, but also longer in time when it comes to NATO.
And we are going to hear from President Zelensky. We've heard from him often, of course. He talked about how Russia showing that he saw there was room to compromise, which was some interesting thinking from him overnight. He's going to be appearing before Congress later, asking for more aid. We've seen him talk to the European Parliament. We've seen him talk to the British Parliament. Is he likely to get any more support from the United States?
Well, Anna, this is a message that he's repeated throughout for weeks now. Ukraine is very aware that nobody's going to go to Ukraine to fight this war. This is a war that they're going to have to fight for themselves, but they still continue to say we need defensive weapons. We need systems that can keep Ukraine competitive when it comes to the Russian army, but also financial and humanitarian aid. What is interesting, though, is that change in tone from Mr. Zelensky, perhaps a reality check for Ukraine, now signaling that for them it is becoming increasingly clear that they are not going to be accepted or joining NATO anytime soon. Instead, the Ukrainians now say the country, what it needs is a global security guarantee that would potentially protect the country for future threats. Again, this was a conversation that we had last week with a member of the Zelensky office who said it would be an international security guarantee that would entail not just Russia,